Goldman Sachs. Is Apple rally sustainable? We don't think so. Welcome to RJTICHARTS.com. But first, stock and options trading carries high-level risk and can result in the loss of all of your investment. Futures and Forex trading can result in the loss of all or more than your investment. As such, options trading may not be suitable for all investors. You should not invest money that you cannot afford to lose. If you want to know whether a company has the capabilities, the credentials worthy of your ear, you have to show that you can dance with some of the best financial investment institutions on Wall Street today. And who hasn't heard of Goldman Sachs or JPMorgan, BlackRock, to name a few? So, when you say or project something against their market outlooks, you better know what you're talking about, because they are some of the wisest marketeers on Wall Street from the yesterdays and today. Yet, we're going to do just that. Give you our outlook versus many on Wall Street. When it comes to Apple, it is obvious. It is a great company. But for some reason, many think it's too precious to fall 20 to 35% after the current rally exhausts itself is puzzling. And Goldman Sachs' buy recommendation a little while ago offers that the troubles for Apple is over with. Matter of fact, since the banking sector has found a little bit of relief and China has made some positive comments about the economy, that helps to support the positive outlook for Apple and other companies. We understand from a fundamental standpoint why one would recommend to buy Apple now. Of course we understand this. And this is why we didn't argue against a buy signal from Goldman Sachs. Yet, our buy signal was generated the week of January the 27th, 2023. So, one might raise the question, RJTI charts, why are you saying something about Apple negatively or markets in general if your algorithms are on the buy side? Answer. What we understand is that bullish turns to bearish at some point, and we're projecting what is to come on a larger scale down the line. Also, we can see when to run from any bullish trend. When you think about a surfer, the rider of those waves does so for as long as the wave carries them, and either at some point they must bail or the wave comes to an end. But then there are those times that a surfer is cruising a wave and bam, out of nowhere, water smack them off of the surfboard and under they go. So what we're saying is that Apple and the markets in general are subject to get that bam at some point according to our algorithms. So in conclusion, we agree with Goldman Sachs and others about Apple trading higher for now. But where we fervently disagree is that Apple trade, which commenced since January 2023, and markets such as the S&P 500, NASDAQ, the Dow, aren't going to avoid trade back to January 2023 levels. So, this is our angle, and why we're saying many are to suffer that don't have a clue because they don't know when to run. And the majority don't have a clue as to what's coming around the corner, and therefore portfolios are to take another hit at the appointed time. But what about the good economic data reported? GDP, U.S. consumer confidence, S&P Shiller Case Home Price Index, initial jobless claims. Okay, These were positive things. But in a large scheme of things, they mean absolutely nothing. And fundamentalists will find out at some point results from our projection we're making. There's something we see that is underpinned in the markets, which must be corrected before any sustainable rally can be maintained for the long term. Take a look at this. Yes, we're circling back from other messages in regards to the VIX. We want to echo. We still think that the VIX has a lot of upside potential. It did hit our level, the yellow line, 28.43. But our algorithms say that 45.37, the green line, and 61.99, the light blue line, and even the purple line, 87.14, is still capable of trading. Where's this VIX pop going to ignite from? The banks. According to our algorithms, the 613, if not lower trade levels, should print. Yikes. So although a rally is at hand, our forewarning is that you should know when the time is present that a long position in Apple since January 2023 is at risk of becoming your headache. Goldman Sachs and others just might see what we see, but we're telling you that Goldman Sachs and anybody on Wall Street who believes Apple isn't going to retest or take out the low made in January 2023 is mistakenly wrong. Our algorithms don't know how to make it more clear than what we're messaging now, that we are against the wisdom of some of the wisest investment firms on Wall Street today. Get your Ramo today. Get your equity subscription today. To contact us, info@rjticharts.com, 888-521-3555, rjticharts.com, driven by infinite wisdom and its proprietary trading systems.